We are live again. Welcome back, everybody, to the Crypto Sherpa channel, where I read you those cryptocurrency news articles so you can stay informed and know what's going on in the crypto space. And I said we are back because, oh my gosh, it wasn't until the halfway point that I saw a comment on the video saying, "No sound, can't hear you." I was like, what? I went on my video. I was like, wait a minute. I muted my microphone at the start of the video. So we should have some audio right now. I really do hope we do. So if anyone hears that there's no audio going on right now, please let me know. I see that my mic is unmuted now, so we should be good. So let's pray that there's no more mishaps for this video. But yes, happy weekend or happy Monday. Hope everyone had a good weekend. We had lots of events go on. We had the roundtable, crypto SEC roundtable. They just talked about custody and just how SEC Chairman Paul Atkins talked about we stifled innovation all these years, so now we have to get back to a place. And so that took place over the weekend. Bitcoin's been hovering around like 95, 94, so it's been testing that support level at 75,000, 90,000, so it's doing really good there. But as the title said, is strategy creating a synthetic Bitcoin happening right now? Like, that made me really start thinking as I was going over this article, because we always get a Bitcoin halving every 4 years. The Bitcoin halving is an event that takes place every 210,000 blocks on the Bitcoin blockchain, and that's when the amount of newly minted Bitcoin gets cut in half. So right now there's about 19 million circulation. There's about 450 new Bitcoin a day that get added to that circulation market, but every 4 years that gets cut in half. So I started off as 50, now we're all the way down to 3.125 Bitcoin. And what I was just thinking about, Saylor his company is buying a lot of Bitcoin every month. And this article just really pointed that out. It's like, is he synthetically creating a new type of halving? Because usually, when a halving occurs, we see these price booms a couple months down the road. But since ETFs happened, we had no new cycle, or the cycle's been completely different. We've reached the all-time high before the halving event took place. Bitcoin's been at the 108,000 before it should have done in a normal cycle. So we don't have a normal cycle anymore. And again, I'm going back to when there's only 450 new Bitcoin a day. That's about what did they say? About 13,500 Bitcoin per month gets created for Bitcoin. And Saylor's buying way more than that his company's buying way more than that every single month. So in a way, he is making it deflationary by just getting up all that Bitcoin, and pretty soon you'll have to get it at a premium price, or it'll probably be through them because you won't be getting it on exchange anymore. So we're going over this article about the synthetic Bitcoin halving that strategies may be making. We got news on the celebrity Bitcoiner TJ Miller talking about why celebrities don't want to learn about Bitcoin because they just don't want to take the time to learn about it. We'll go over what happened at the SEC roundtable. There was a glitch in Coinbase, so hopefully you weren't affected by that and just freaking out about it, because there really was no situation. We'll talk about some stablecoin news, Nike's fixing a lawsuit, and how playing Web3 games it's still going towards the direction where it just should be one main wallet. So those are the articles we're going to be covering today. And again, please give me a shout out if we do have volume, because again, this is a re-recording because I had to stop and then reset this all up. So let's go through these news articles and learn about what's going on in the space. So again, strategy is synthetically halving Bitcoin, says Arthur and Analyst. So the company's rapid accumulation of Bitcoin is acting as a reliable constraint on newly mined supply, argues Arthur Adam Livingston. So Michael Saylor's strategy is synthetically halving Bitcoin by purchasing half or more of the newly minted supply from miners every single month, according to Adam Livingston, a BTC analyst and author of The Bitcoin Age and The Great Harvest. Now, Livingston said that miners currently produce around 450 Bitcoin per day, or approximately 13,500 Bitcoin per month, but Strategy acquired 379,800 Bitcoin in the last 6 months. This translates to the firm purchasing roughly 2,087 Bitcoin per day, which far in excess of the daily miner output, the author added. Now, he said when Bitcoin becomes this scarce, access to Bitcoin will require paying a premium, lending against Bitcoin will cost more, and borrowing Bitcoin would become a luxury business reserve for nation states and corporate wills, and Strategy will control the bottleneck of it. So again, guys, it's going to get so scarce when we see like this stuff happening. And again, like this is just strategy, like acquiring it. And again, it's not just Saylor like being the one like who owns all this Bitcoin. The company strategy has a bunch of shareholders and owners that they gotta talk to before any decisions made. So it's not just one person in the background like controlling it, but that company does hold a large amount of Bitcoin. But Bitcoin's global cost of capital will no longer be set by the market. It will be set by the gravitational policies of the first Bitcoin superpower strategy. Livingston continued, saying that the author's prediction of a Bitcoin supply crunch translates into much higher Bitcoin prices if strategy can continue its pace of Bitcoin acquisitions, while the market demand for supply capped and digital asset grows among institutional and retail investors. And now here's a chart showcasing the price of Bitcoin versus the miners' actual reserve. And the miners out there, like their holdings of Bitcoin in their wallets is dropping to extreme lows. And the companies like Strategy, BlackRock, even the governments, they're going to be going to miners to buy Bitcoin over the counter. But when they can't get it anymore because they just don't have the supply anymore, they are going to go to the exchanges. They're going to liquidate it. And then that's when you start seeing like, oh, why is it taking me a month to withdraw the Bitcoin I just purchased? Or why do I have to wait 6 months? Like it could get to that. Like it's because like we're going to get to that point. I remember I saw a comment this morning in Ben's YouTube show, and some guy was just going like, stop spreading lies. Like I was able to go to Coinbase, make my purchase, move my Bitcoin right off the back. You guys are lying. It's like, dude, look at these charts right now. It's like, this is what's going to go happen. Once Strategy, BlackRock, the government, all other countries around the world gather up all this Bitcoin off miners and everything, they got to go to the exchanges. Once it's liquidated there, they're going to cover those orders first and then cover the retail little man next. So just be worried about that. Get your Bitcoin and get it into your own wallet, because that's going to give you a huge amount of power. Like they said, like who was it? He said it in this little line right here. So like when you borrowing with Bitcoin, it will become a luxury for business reserve for nation states and corporate wills. And you could be a part of that action. Like you don't have to wait and see like, okay, let's see what these big guys are going to do. Take a part of it, buy some Bitcoin, put it in your own wallet. And then you don't have to worry about it. And you can actually be like one of these big guys in the future and like, yeah, borrow against it. It's a luxury. People want to be paying a lot more to get it because they just can't go to the exchange. So just be aware of that. But let's continue on about this article talking about institutions like Strategy are driving the world toward hyper-Bitcoinization. So Cypherpunk and Blockstream CEO Adam Back predicted that Strategy and other institutions that have adopted a Bitcoin corporate treasury plan will drive the market capitalization of Bitcoin to $200 trillion. Now, Strategy and other treasury companies are in arbitrage of dislocation between the Bitcoin future and today's fiat world. Back wrote in April 26 X post that critics of the company warned that debt-based approach to Bitcoin acquisitions could sink Strategy financially if a prolonged Bitcoin bear market takes effect. And also warns of greater systematic risk to Bitcoin from such high concentration of the digital currency held by a single entity. So we got people out there just saying, talking about going, oh, well, if there is a bad bear market, this borrowing against Bitcoin is going to be very bad for Strategy. That's going to be our next market. So you got the skeptics out there. Again, that's one probability that could happen. We have a bear market. Yeah, it would definitely hurt it, but Strategy and Saylor, they're going to keep buying no matter what. It doesn't matter. So again, whatever happens to the company, they still got the Bitcoin. It's in their own private key. But where was I even going with that? It's just a yeah, I forgot where I was even going with that. Sorry, guys. Re-recording of a video, so I'm getting lost. But let's continue on. So, however, Bitcoin advocate and author Saifedean Ammous recently said that Strategy's concentration of Bitcoin doesn't threaten the protocol at all. He argued that institutions like BlackRock and Strategy holding high concentrations of Bitcoin could not engineer a hard fork, increasing Bitcoin's maximum supply as it would massively devalue their holdings, which at the end of the day belong to shareholders with power to divest. So in closer of this article, like even though we have big entities holding like a large sum of the Bitcoin, they can't control the amount of Bitcoin that gets created. They can't control a hard fork to make some changes to the Bitcoin blockchain code at all. They can't do that at all. So there's really nothing to worry about there, because if people are out there saying, oh, they hold so much Bitcoin, they can just make more. It's like, why would they? That's just going to even also hurt their own value. It's like, you increase more, it's going to lower the value. It's just like how the dollar is. So they're not going to do that. But it has no effect there. And yeah, so again, Bitcoin's getting gobbled up, guys. And like, again, we're seeing a whole new cycle. It's like, just take action right now. Because again, right now what we've seen is not normal. Usually we get an all-time high around this time for Bitcoin. We got it last April we got it in November after the election history, but we reached an all-time high before that prior 108,000 before the Bitcoin halving last April. So like it passed like 78,000 or was it 84,000? I forgot where it surpassed, and then it had a little pullback back, and then November hit, and then we saw that spike up to 108. But we're just not in a normal cycle anymore. Now, we just got to wait and see how this is going to play out. Like once 2026 hits, we will know our true answer. It's like, are we going to follow traditional cycles? Are all markets out there just going to take a 90% correction, altcoins, Bitcoin, everything? We just got to wait to see. But right now, we don't know if that's going to happen because it's not following the traditional cycle and pathway that it normally runs on. So, but by having this, though, having a synthetic halving, making it even more scarce, that is just going to cause Bitcoin's price to really go up. So take it as it is, buy some Bitcoin, get into your own wallet, and you're good to go. So that was our first article for you. Now let's move on to what happened at the crypto roundtable this weekend. So Paul Atkins insists on current framework badly is needed for attention at the SEC's crypto roundtable. On April 25th, 2025, the U.S. Securities and Exchange Commission hosted its first major crypto task force roundtable, headlining the Washington, D.C. event with the newly appointed SEC chair, Paul Atkins. Now, the market itself seems to indicate that the current framework badly needs attention, and this is important work as entrepreneurs across the United States are harnessing blockchain technology to modernize aspects of our financial system. Said Atkins, and I expect huge benefits from this market innovation for efficiency, cost reduction, transparency, and risk mitigation. Now, he further insisted that market participants engaged with this technology deserve clear regulatory rules of the road, and innovation has been stifled for the last several years due to market and regulatory uncertainty that unfortunately the SEC has fostered. Now, this discussion at the roundtable also marked a symbolic departure from the enforcement-heavy posture of his predecessor, Gary Gensler. Now, here is a tweet from Jason Myers, showcase just talking about like what did take place during the event. So here's what he said. Let me zoom into that so we can see it. So today at the SEC Crypto Roundtable, we heard from Paul Atkins in his first public address as the newly sworn in 34th chair of the SEC. Innovation, unfortunately, has been stifled for the last several years due to the market and regulatory uncertainty that unfortunately the SEC has fostered. Now, this was the third of 5 roundtables, which covered Know Your Custodian. All 4 SEC commissioners were present, and this administration and the newly constituted commission under the leadership of Paul Atkins with Commissioner Hester Pierce chairing the crypto task force holds a new promise to make the United States the crypto capital of the world. And is that the crypto mom right there? Is that Hester Pierce? I cannot tell. I don't think so. I'm not positive. But no, yeah, so like he still does want to make the U.S. the crypto capital of the world, which we can finally do. We cannot no longer be fostering innovation anymore. He said that. We saw that in the last 4 years during the Biden administration. So now we want to bring everyone back, and they're just sitting down. They're having conversations and like what's actually going on in the space, and that's what needed to happen. Like, what's the problem? How do we address it? Let's just sit down and talk about it. So that's what's actually going on. But continuing on, he said that our regulatory approach should recognize the differences across crypto assets, said the crypto mom during this meeting. So Atkins also praised the SEC Commissioner Hester Pierce for her principled and tireless advocacy for common sense and crypto policy within the U.S. He said it's no wonder that she has earned the title of crypto mom. Meanwhile, according to Pierce, the SEC should acknowledge and welcome the fact that blockchain technology empowers investors by allowing them to self-custody, trade, and otherwise engage with their assets without the use of any intermediary. Now, our regulatory framework should not stand in the way of these innovations by forcing intermediation, she said. And that's so true. It's like these guys don't get it. Like blockchain is known for, we don't need a middleman, but like previous administration, they want to force that middleman in there. It's like, do that with the centralized entities, keep that with the exchanges out there, keep that with the centralized tokens out there. But when it comes to DeFi and Bitcoin being a truly decentralized distributed ledger, stay away from there. You don't need that at all. Like, you cannot control that. So she has definitely gained herself the crypto mom term because she does know what she's talking about. But the roundtable, attended by industry leaders, regulators, and legal experts, focused on critical issues of digital asset custody, a long-standing pain point for crypto firms seeking to comply with federal security laws. Now, talking about digital asset custody, Carolina Crenshaw said that some believe that the differences from traditional assets justify exemption of disparate treatment from custody of crypto assets under our rules. Now, but if we are to consider implementing an alternative custody regime for crypto assets, something the SEC has not done wholesale for another asset class without good reason, we must keep in mind some guiding principles. So, existing SEC custody rules are a gold standard of investor protection, she continued. However, she questioned if the SEC were to create a dual regime, how do we ensure the crypto regime is as robust as the current regime? Additionally, how could the Commission address the increased risks to investors and the broader financial system that may stem from different crypto custodian rules? How can we do this? So again, she's addressing problems and concerns right now. And since before these roundtables, we never had any discussion about it. It was just Gensler going, nope, 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 final decision done. Just kept pushing away. Let's keep suing some more guys. But no, we're finally actually taking time to sit down. It's like we're going back to the olden days of how politics and rules were first mentioned. It wasn't just shouting at one another who's got the loudest voice. It's like hey, guys, let's discuss what's going on. What's the problem? Let's try to solve this together. So I love how they're doing all of this right now. Now, Michael Saylor says Paul Atkins will be good for Bitcoin. Now, yeah, he voiced his voice in this. Atkins was sworn in on Monday, the 21st of April, as the 34th chairman of the U.S. SEC, marking a significant shift toward a more crypto-friendly regulatory stance. Strategy chairman Michael Saylor took to X to say that the SEC chairman, Paul Atkins, will be good for Bitcoin. Commenting on Atkins' appointment, Trump said that he's the perfect man to lead this agency at the time when crypto innovators are urgently in need of regulatory certainty and clear rules of the road. Meanwhile, Atkins said that Bitcoin and crypto will be his top priority. As I return to the SEC, I am pleased to join with my fellow commissioners and the agency dedicated professionals to advance its mission to facilitate capital formation, maintain fair, orderly, and efficient markets, and protect investors. Atkins said that together we will work to ensure that the U.S. is the best and most secure place in the world to invest and do business. So that's what took place during the third roundtable event. Our next one should be happening in May, so far in a couple of weeks, and I forgot what that one's going to be about. So I'll keep you informed on what they'll be discussing and when the date comes for that. And then again, we'll go over it again when the meeting's over and we get a news article so I can report on what did they discuss in case you missed it. So that's what took place during this last SEC roundtable event. Now let's move on to the Bitcoiner TJ Miller news, as how he's saying why celebrities just don't want to learn about Bitcoin or become orange pilled. It's because they're lazy. They don't want to take 50 hours just to understand what it is, and because that's all it really takes. It just takes 50 hours for an average person to understand Bitcoin. But it's so hard for people to, after they graduate high school or college, they don't want to learn anymore. Be honest, that's true. Nobody ever wants to learn something new after they graduate. Like, I did my learning, I just put in my time. I don't need this anymore. But you got to put in the time, read a book, watch a movie, watch a demo, just slowly start to understand this. It just takes 50 hours. That's it. So let's hear about what he says about this. So TJ Miller says that there will eventually be a movie about the Bitcoin revolution, and it will be interesting because it didn't all happen at once. And no, it did not. So it will be interesting when we do eventually get that. It's going to be like connecting the dots out there. So this happened at this date, this happened there, and eventually it leads to the whole revolution. But comedian and actor TJ Miller says it only takes a little over 2 full days to get the average person up to speed on Bitcoin. However, when asked why more celebrities aren't Bitcoiners, he says most people simply refuse to ever sit down and study it again. He said it's really hard to get people to study after they graduate from any level, Miller told Natalie Brunelli on the April 23rd episode of Coin Stories. Miller claims it takes about 50 hours to study to understand Bitcoin, but Hollywood rewards those who do not think differently. So as us Bitcoiners, we do think differently, traditional way, and Hollywood does not reward that. So it makes sense why the celebrities won't take the time to do it. So to say to somebody that it takes 50 hours for you to understand this, they're like, I don't want to, he said, and they can't even watch a Netflix series that they can't even watch White Lotus because it takes 7 hours. So people are just impatient. They don't have time. They need short, fast bursts of just information sent to them. And yeah, TJ Miller said on the Natalie Brunelli show, he's like, yeah, they can't even take time to sit down to watch a Netflix show. So why are they going to sit down to learn about Bitcoin? But Miller said it takes such a paradigm shift to embrace Bitcoin, not just in money or the internet, but in life. And that's also why you don't see more Hollywood celebrities becoming Bitcoin maxis. It's because Hollywood rewards people that do not think differently. During a Bitcoin lunch hosted by crypto entrepreneur Anthony Pompliano, Miller introduced himself that, to his knowledge, he is the only celebrity that is a Bitcoiner. I can't really think of anyone else, Miller said. Now, while there aren't many celebrities known to be publicly active in the Bitcoin community, many have launched their own meme coins in recent years, including Iggy Azalea, Caitlyn Jenner, and Haley Welch, aka the Hawk Tuah girl. But however, Miller said that he has been trying to educate people on Bitcoin for quite some time now. He said when Bitcoin was trading between $8,000 and $12,000, he was telling friends he just put $1,000 into it. Now, Miller is confident that at some point in the future, there will be a Hollywood movie about the Bitcoin revolution, but it will be interesting because it all didn't happen at once, he said. It didn't happen in 3 years. It didn't happen in 10 years. So it will be interesting just to see how they can connect the dots, he added. Now, Cointelegraph's Garrett Jenkins recently sat down with TJ Miller, where it became evident that his enthusiasm for Bitcoin isn't just surface level. He wants to use his platform to educate and inspire others to take it seriously. He said, you can tell that I'm passionate about it, and so that's what I'd like to do, is sort of just be able to be somebody that helps bring cultural awareness, spread awareness, and just a trusting name and face in Bitcoin's community that hopefully will bring more people to it, Miller said. And that's how a lot of us are in here. Like, we just want to make people aware. We want to just show them the right way to do it. That's why we open up these crypto clubs out here, because we know it's hard to learn if you don't want to do it online. Now you have a place to go. Be face-to-face, trusted person out there. And it's like, we're here to help you. We're not going anywhere. So, yeah, TJ Miller, funny actor, funny comedian. It's a shame that he didn't really, him and Ryan Reynolds butt heads. That's why he wasn't on the last Deadpool movie. But no, like, it's pretty cool that he is a Bitcoin maxi. Like, I saw him in the Nashville Bitcoin conference. He was on that Bitcoin magazine, the actual physical magazine of it, and I was like, wait, is that TJ Miller? And I was like, oh, no way, he's a Bitcoiner. So he's been in it for some time, and he's just spreading awareness, and he's totally right. Celebs will not get in it because they just don't want to learn. But that was our Bitcoiner TJ Miller news for you. Now let's move on to a Coinbase hack, which had no harm to anybody, but hopefully you didn't freak out and froze your account, maybe an error that you shouldn't have. But yes, Coinbase UX glitch caused false security alarms for users. Now, the crypto exchange has fixed a user interface error that incorrectly flagged password attempts as two-step verification failures. So, crypto exchange Coinbase has reportedly fixed a user interface error that incorrectly labeled failed password login attempts as two-step verification failed in account activity logs. Now, the mislabeling caused users to believe attackers had successfully used their passwords and were only stopped at the 2FA verification step, according to Lawrence Abrams, founder of cybersecurity-focused publication Bleeping Computer, who identified the issue earlier this month. Now, the exchange has reportedly fixed the error by updating its system to show password attempt failed when needed. Now, per Bleeping Computer, users reportedly spent hours checking their devices for malware and changing passwords because they took the notifications to mean that their account had been hacked. So they were freaking out going, oh no, my account's hacked. Like, I'm trying to put in my two-factor, it's not working, but it was just an error. So maybe they at least just froze the account and then they just got to deal with getting that back. So have fun with customer support. They do suck. Now, Coinbase representative did not immediately return to Decrypt's request to confirm or comment about this matter. But if you're wondering what two-factor authentication is, or 2FA, it is a security process that makes your online accounts more secure by requiring at least 2 different ways to prove your identity before you can log in. It's one of a number of ways to protect your privacy online, and a lot of exchanges do require you to have this. But when users encounter confusing interface elements, they may make wrong decisions in response. In 1993, while working at Apple, Don Norman, founder of Nielsen Norman Group, or NN/G, coined the term user experience to describe how a user can use apps without fusses or bother. But according to the guidelines published by Nielsen Norman Group, error messages should use plain, understandable languages. Now, the cognitive complexity of using crypto apps represents a significant barrier to crypto's adoption. Alana Dobshinska, senior product manager at Calabera, wrote in a study on how to improve your user experience in crypto apps. Now, some 34.7% of crypto users classify themselves as rookies and show less confidence in managing their own digital assets, according to a 21 paper cited by Dobshinka, explaining why users protect their private keys in different ways. Now, crypto asset users differ in their security and risk perceptions, the paper read, because users come from different levels of familiarity with crypto. Their decision and behavior affect how they practice their security, the researchers suggest. And the Coinbase UX incident is a case in point, illustrating how small labeling mistakes can set off security alarms among users, even though there was no real threat. And you know what could have solved you from this whole hassle? Don't keep your coins on crypto exchanges. If it was in your own self-custody wallet, whether it be your Calyx laptop, your Exodus wallet, your MetaMask wallet, your Trezor device, whichever self-custody wallet it is, if you got this flag in error, you won't be freaking out about your crypto because it was an exchange error, not a crypto error. Now, again, people will be freaking out because they're thinking, oh, someone hacked in, now they're going to get all my crypto, but that was never the case with this, but you'd see how people will make a mistake. But if you don't need to have that fear of it, again, if your coins were somewhere else and you saw that, you'd be like, I'm fine. My coins are safe in my wallet, nothing to worry about. And then say the situation arose, it's like on that day, it was like, I need to pay my car bill coming up. Let me sell some crypto. Oh, Coinbase isn't working. Well, you know what? Let me send that Bitcoin to Cash App. Let me send it to Venmo. Let me send it to Baya. Wherever. It's always good to have at least 3 to 4 fiat on and off ramps exchange platforms out there just in case the situation happens. But this is just a clear example to get your coins off the exchanges. So yeah, so it was a fault. It was an error that did happen, but it was a nothing to worry about error. So if you were freaked out and froze your account, you're good to go to reactivate it because there was nothing wrong. It was just a UX glitch out there. So that was our Coinbase error news I had to report on for you. Now let's take a quick little ad break to play a commercial, and then we'll be right back with some more crypto news.
Attention visionaries and pioneers, the future of wealth is here, and it's spelled Bitcoin, Bitcoin. Introducing the exclusive Loans for Bitcoin program at the Bitcoin Ben Crypto Club, where your good credit unlocks 0% interest loans for up to 2 years, or term loans up to $250,000 spread over 7 to 12 years. Why wait? Use this capital to acquire the world's fastest appreciating asset, Bitcoin. With prices hovering around $94,000 and projections aiming much higher by the year's end, the time to act is now. Leverage isn't just for Wall Street anymore. Arbitrage the low cost of your loan against Bitcoin's explosive growth. It's smart finance for the modern investor. And privacy matters. Our no KYC Bitcoin purchase program ensures you buy and self-custody your assets in your own wallet. Your keys, your Bitcoin, your future. And as the world shifts to digital currencies, be ahead of the curve. Front-run corporations, governments, in this greatest financial revolution of our times. I'm Jay Bose, CEO of Bitcoin Ben Crypto Club. Call or text us today at 941-413-6920 and get started on that loan application. Secure your legacy. You will thank yourself tomorrow.
And we are back. So yes, if you want to get a loan, buy some Bitcoin, give that number a call. There's so many more perks and programs that we offer here at the Crypto Club. Again, our loan program is one of them. We got the no KYC Bitcoin purchase program. And on today's Bitcoin Ben show, if you heard him talk about it, that was Jay, our CEO of the Crypto Club. We're starting home to hodl. Like, we all remember what happened in 2008, 2009. Real estate just went down. So it's like, why not put it into a solid asset right now? Borrow against that. Bitcoin goes up, housing goes down. You are good. You can just pay that off even faster. And you still hold your asset. And now you got Bitcoin too with it. So yeah, so definitely give the club a call. Give that number a call too if you want some more information. Or give us a text as well. Sometimes texting will be easier because that phone is always ringing. Now let's continue on with the news. What else is going on in this space? I'm not going to go through this news article, but I got to mention it. Tether mints another $1 billion of USDT amid the rising crypto demand. So this is a bullish trend for crypto because this is just more capital can inflow into the Bitcoin space, the crypto space. It's like it's on the chain, so it's just easily, you're not dealing with the banks to move it over there, but it's just ready to go. But Tether's issuance of the 1 billion USDT was tracked on chain and has been noted as an inventory replenishment. This followed the increased Bitcoin accumulation by major market players like MicroStrategy. Bitcoin's rise to 2.6% amid heightened trading activity, and large USDT mints historically precede bull market. So when we see that these tokens get minted, it's usually in response to like, yeah, a bull market is coming. So we are sitting at like 94,000 right now. Are we going to be touching 100,000 this week? I hope so, but I feel this could be our turning point for Bitcoin's price. And then fingers crossed we do hit alt season, because when we look at that alt season chart here on this one next to the Fear and Greed Index, we're at a 15 out of 100. So we are still in Bitcoin territory, not alt season yet. So hopefully we'll get that soon. But yeah, printing that 1 billion Tether token, was it 1 billion? Yeah, 1 billion Tether tokens. Whew, can't wait to see where that inflows. But let's continue on though with another stablecoin news article. So this one revolves around a crypto-centric stablecoin, a crypto collateralized stablecoin, but they depegged. So you always want to do your research on which stablecoin you may want to go into. Again, stick with one of the bigger guys, Tether or USDT, because some of these smaller ones like Synthetics SUSD did destabilize, and I think it's at 66 or 88 cents right now. So it's not that $1 mark where it should be. But the Synthetics protocol stablecoin dropped to a new low this week, extending its month-long depegging trend. So the Synthetics protocol SUSD stablecoin fell to a new low of 66 cents this week, over 30% below its intended $1 peg, extending a month-long depegging trend that has raised concerns about the protocol stability. Now, it's worth pointing out that SUSD is not an algo stablecoin. It is a pure crypto collateralized stablecoin. Synthetics founder Kane Warwick wrote in an April 12th tweet thread that the peg can and does drift, but there are mechanisms to push it back in line. These mechanisms are being transitioned right now, hence the drift. So here is what he said. So why is SUSD depegging now if there is only good news ahead? Because the primary driver of SUSD buying, debt management, has been removed. New mechanisms are being introduced, but in the transition, there will be some volatility. So it's worth pointing out that the SUSD is not an algo stable coin. It is pure crypto collateralized stable. That the peg can and does drift, but there are mechanisms that push it back in line if it goes above or below the peg. Now, these mechanisms are being transitioned right now, hence the drift. So we'll see if it does bring it back up into place, but let's just find out. But in the same thread, Warwick tried to contextualize the situation by comparing SUSD's volatility to other stablecoins like Tether and MakerDAO. Here is the SUSD, definitely much more volatile than both Tether and DAI, especially when you factor in the scale of the chart, he said. But the volatility follows the implementation of the SIP 420 upgrade on March 7th, a major update that restructured how debt is handled in the protocol. Now, the change moved from individual SNX stakers backing SUSD to a shared debt pool, slashing the collateralization ratio from 750% to 200%, a move that weakened key peg support incentives. On March 20th, SUSD dropped to around 98 cents, dropping to lows of 91 cents at the end of the month, before continuing its downward trend through April, per data from CoinGecko. Now, this new design improves capital efficiency, but it broke an important stabilization mechanism. Mrinal Thakur, Modular Blockchain Akko's head of ecosystem, tweeted, "There is no longer a strong incentive for stakers to buy cheap SUSD and repay debts. So if enough fear builds up, users rush to exit, creating more SNX sell pressure and feeding a cascading loop," Thakur warned last week. Now, the court also noted how the liquidity is thin, AMM pools are heavily SUSD weighted, and small moves cause outsized price swings. Meanwhile, Warwick said that SUSD's current instability is temporary, claiming that "I'm actually not worried about synthetics for the first time in years, which is why I have been buying SNX this year." Now, despite his optimism, he warned holders it would be horrible to get shaken out here. I'm not saying this is the bottom. It very likely will get worse before it gets better. Decrypt reached out to Kane Warwick and will update this article soon as he responds, but SUSD stablecoin's recent depegging follows persistent instability since the start of the year. It first dropped to 96 cents in January, struggled through February, and then only briefly stabilized in March before diving again in April. And then following its crash to 66 cents, the price of SUSD recovered to 83 cents on Friday, but volatility still remains high. So in the short term, Synthetics is bolstering liquidity through curve pools and deposit incentives on its derivatives platform Infinex. And medium-term fixes include debt-free staking and to encourage individual debt repayment. And long-term, it's planned to manage SUSD supply directly and add new adoption incentives across its product. Now, while the Synthetics Trezor reportedly holds 30 million in SUSD and other reserves like USDC and OP, the core cautioned that the situation is fragile. So guys, it's up to you. If you're holding this stable coin, you want to keep it, or even the STX token, the Synthetics one, like, it's up to you. Just be aware that this is the risk. When coins depeg, I am usually very freaked out about it, uncertain. Usually I don't touch them anymore. I just get rid of it. There's a lot of people who are still bagging on the Luna Classic coin out there. Like, I thought it was done. Is it still done? Luna Classic? Because I know some people still want to get, it's like, look, it's so low. Why can't you get it? It's like, yeah, it's because they depeg. They did terrible stuff. So that's why I didn't trust it. So when I'm seeing this right now, Sherpa's honest opinion is I wouldn't do it. But again, you guys do you. Just always do your research, know what you're getting into before you make a move, and just, yeah, have fun with it still as well. Don't get too scared. Just, again, the main thing is do your research, because there's no one else to blame but yourself in the crypto space. You are your own bank. You're responsible for everything you do with it. It's not just because someone told you to do something. Final decision always comes down to you. So that was our stablecoin news. Now let's move on to a Nike lawsuit. So yes, Nike faces a $5 million lawsuit over losses from the shuttered NFT venture. So investors allege that Nike's sudden shutdown collapse of the market for its NFTs and say that they would not have bought them if risks had been properly disclosed. So Nike is facing a lawsuit from a group of investors who claim the company's abrupt shutdown of its digital collectibles venture, RTFKT, wiped out the value of their purchase and left them facing heavy losses. Now, in a class action filed on Friday on Brooklyn Federal Court, Australian resident Jagdeep Chima and other plaintiffs accused Nike of orchestrating a rug pull by shuttering the platform on December 2024. Now, they allege that Nike's decision caused the market for its branded non-fungible tokens and related cryptocurrency assets to collapse. The plaintiffs said that they would not have purchased the NFTs at the prices they did, or at all, had they known the tokens were unregistered securities and Nike could abandon the project without warning. Now, here is that tweet from Briefing Block, just acknowledging the lawsuit that's happened in New York for $5 million. And they're just claiming that Nike violated the consumer protection laws. But Nike, which is based in Beaverton, Oregon, has not yet commented on the lawsuit. Now, Nike's digital ambitions hit a roadblock after the RTFKT closed. The sportswear giant entered the NFT space in 2021 when it acquired RTFKT, a digital fashion collectibles brand that merged gaming, culture, and blockchain technology. The company promoted the acquisition as a push into the next generation of innovation. I remember when this partnership happened. I've been reading the news. I've been doing news for 4 years now, and I do recall covering this article. Now, at its height, RTFKT's NFT generated around 168 million in sales, fueled by Nike's marketing power and growing excitement around digital ownership. However, the momentum faded, like Nike announced on the RTFKT's wind down on December 2nd, 2024, saying that the spirit of innovation would continue through creators and projects inspired by the brand. Now, Nike faces heat over the alleged failure to disclose NFT risks. Investors argue that Nike's closure of RTFKT blindsided them. They claim that the company failed to disclose regulatory risks tied to NFTs. Moreover, they point out that the legal classification of NFTs under U.S. securities law remain unsettled. Now, the lawsuit seeks more than $5 million in damages. It cites alleged violations of consumer protection laws in New York, California, Florida, Oregon. And in addition, these cases raise broader questions about how brands should approach Web3 ventures as regulatory scrutiny over digital assets continue to intensify. So this lawsuit's going to go on. And again, I remember when this article came out, and I feel like we can. My videos are all recorded, so we could probably go back and see like what I specifically said about it. Because at the time, NFTs were all in the craze, but I was still on the get Bitcoin, get some of these tokens, guys. These are just NFTs. These are artworks. They're just not so mainstream right now. A lot of them are just money grabs, and yeah, just markets is dipping into the market, going, oh, people like this. Let's get in on it too. It's kind of how the celebrities make meme points out there. It's just the hot topic. So I think back then too, I even warned people like, just be careful about this because these are what NFTs do. This one probably didn't have any real utility behind it. So just always be careful. So that's Nike's lawsuit. And now lastly, in our last article, we're going to talk about playing Web3 games with one wallet is still the vision of the sandbox. So yeah, so with gaming out there, we still want a one wallet use case where you can take your items in that wallet and convert them to multiple gaming platforms, multiple games out there. That's how the metaverse should have been. So that's still the vision for Web3 games. So let's go over this article. So the Sandbox co-founder Arthur Madrid told Cointelegraph that players moving from one game to another with a single wallet remains one of the narratives in Web3 gaming. Now, wallet interoperability still remains the vision for Web3 gaming, according to Arthur Madrid, the co-founder and CEO of the decentralized metaverse and gaming platform, the Sandbox. In an exclusive interview with Cointelegraph at the Crypto Polo event in Dubai, Madrid and the Sandbox co-founder and chief operating officer, Sebastian Bourget, told Cointelegraph that Web3 gaming interoperability remains a goal for Sandbox, Madrid said. So the vision is still kind of obvious for us. It's like you need to be able to play any games using one wallet that will enable you to combine the utilities of all that you collected and all what you've earned. The Sandbox CEO said that one of the main narratives they've seen in the last couple of months is that players can move from one game to another using a single wallet, and the executive told Cointelegraph that players accessing games with one wallet and using their items on different platforms remain an exciting topic for Web3 gaming enthusiasts. Now, Web3 gaming still booming as tools become accessible. Madrid added that despite a market slowdown, the Web3 gaming space is still booming. The executive told Cointelegraph that the tools and infrastructures needed to create new games have become more accessible. I can feel that the tools you need to create games are becoming more accessible. If you look at the number of games that have been created on gaming platforms over the last few years, it's still booming, Madrid told Cointelegraph. Now, the executive also said that the new generation of programmers and programming tools is working on new types of gameplay. Madrid added that the space needs only one good game that could serve as the catalyst for the broader adoption of Web3 technology in gaming. Now, the thing is, you always need this moment where one game is making a difference, and you have this moment of rebirth, Madrid said. Now, the Sandbox co-founder highlights a shift in NFT utility. Now, Bourget told Cointelegraph that non-fungible tokens, the space is now ceasing a shift in focus. The executive said that their team is seeing more maturity in the industry as it shifted from using NFTs to do fundraising and just profile pictures to better use cases, because that's what had to happen with NFTs. Instead of just being a profile picture or a fundraiser or just a little piece of artwork you collected, it needed to have more use cases, and they're seeing an increase in it. Now, Bourget said that this was driven by consumers demanding more use for their digital assets, and the executive said that creators and developers must focus on adding more value to their NFTs to keep up with this demand. At the Sandbox, we still continue to see more demand for our virtual land, avatars, and other NFT collections, such as the Jurassic World, because they can be used across the game right away, Bourget said. So, there is a Jurassic World in the Sandbox, and yeah, I guess they can move their NFTs collections like the other platforms as well. But yeah, so NFTs, this again, they need a more utility and more use case behind it than just be a piece of art, a JPEG out there, because that's how they were doing it back in the day. So it's still the vision, and that's how NFTs will be used with the Web3 games. And again, once we get one really good game, that can change the entire Web3 industry right there. So yeah, so that's what's going on in the Web3 gaming industry. Like, their still vision is just a one wallet to control it all. Not for your crypto custodian, like to hold on to all your cryptos on, but at least one wallet for all your gaming needs, and that would be perfect. So that is it for all the news I have for you. Let's see, if you're in Greedex, we are at a 52 right now. Let's see, let's take a refresh here. Nope, 51 right now. Altcoin season chart, as I just pulled this up too. We're at 18 out of 100, so we're still in Bitcoin territory. Once we reach 50, that might be the sign of alt season. Bitcoin's currently at 93,600, Ethereum's at 1,757, and XRP is at $2.27. So That's it for the news today. Sorry for those of you who tuned into the 12 o'clock showing. Again, I got to pay attention when my mic is muted or not. But thank you for tuning back in for the rest of this news show. And I will be back tomorrow with some more crypto news articles to keep you informed on what's happening. So have a fantastic day, and I will see you again soon. Peace.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges. It's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.